and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues on the D Street, starting from the benchmark index moves as well as the sectoral action, as well as some of the stocks that are buzzing the most in trade. Well, the US Fed meeting is done and dusted. The hike has come in as anticipated of 25 basis points, and the markets have also reacted slightly volatile from the starting of the day until now, but the markets have actually come into the green now, erasing most of the early morning losses. If you look at how the Sensex is trading right now, it's about a 53 points uptick that you can spot for that one. 58,264 as the current level. The Nifty also hovering 15 points higher at 17,167 odd levels as well. Now, when we look at the other broader markets indications as well, from the mid cap and the small cap 100 basket, you will be able to spot that both these indices are actually still in the red, and they are not really contributing to the recovery that we've seen on the benchmarks right here. But the market breadth indicates slight tilt towards the advances, with 30 stocks in the green to 20 stocks that are in the red of the Nifty 50 stocks. The top gainers at this point in time include some of the stocks from the Maruti, auto kind of basket as well. Maruti, Tata Motors, those are the ones that are leading the pack on the Nifty. FMCG major Nestle is up by 1.5%. Axis Bank, Hindalco, the other gainers at this point in time. On the other hand, on the downside, you do spot Asian Paints declining by 2%. There are reports that indicate some weakness right there. HCL Technologies, Bajaj Auto, Reliance Industries is under pressure today, and Infosys seeing a cut of about 1% odd. Among the sectors, again, you do see some losses coming in on the IT pack. That's the one that's dragging today, about half odd percent, followed by the losses in PSU banks and the realty pack as well. But the rest of the sectors are still up in the green, with the gaining points are ranging anywhere between 0.2% to half odd percent higher, with FMCG stocks leading the kind of recovery that we've seen on the index in this morning session as well. Let's welcome our guest for the day. We have Mr. Kranthi Bathini joining in. He's the Director of Equity Research at WealthMills Securities. Welcome, Mr. Bathini, and thank you so much for taking the time out for this discussion. Well, I wanted to understand first from you your thoughts on and your key takeaways from the US Fed meeting, that we've seen the decisions of 25 basis points hike and the kind of commentary that was made in the last evening as well.
Sakshi, first and foremost is there was a great saying on Wall Street, don't fight with Fed. So whether whatever be the kind of decision Fed takes, which is wise or foolish or whatever it may be, we need to take the Fed decision with the utmost care. And the Fed is very much clear. They are telling right now the inflation is sticky, and they want to bring the inflation to 2%. So every time the Federal Reserve governor comes on the media, so every occasion his voice keep on changes. I can sense they're also in a confused state of mind. And what are the relevant data they're tracking, because they have the best of the data available for them, but they could not able to predict the economy, predict the inflation cycle is concerned. That's what we can figure it out easily. But as I repeat, don't fight with Fed, and we need to take the decision with utmost cognizance. And what we need to do for the investor, that is extremely important. So if the Fed continue its fight to control the inflation, the bond yields going to rise, and also we can see the liquidity condition tightening going ahead. So there will be some kind of unintended consequences. What Fed also could not able to predict in past fortnight, that the banking crisis erupted in US and Europe. Right now, investors need to be a little bit watchful what the measures RBI is going to take, because of the cues that are coming from Fed. The commentary coming from Fed is extremely important for RBI also to take further monetary tightening in India is concerned. But I can say, Sakshi, India is in a better position as the crude has been softening. We can see some kind of softening of inflation in the coming few months in India. But for India, the monsoon is extremely important. If we don't get any good monsoon, that's going to hamper India's story also going ahead. But right now, monsoon is very extremely important in a medium to short term.
Yeah. Yeah, absolutely. You know what, I was in fact wanting to ask you is what the Fed has also indicated as far as the economic conditions go as well. They expect the US economy to head towards a soft landing. But is that realistic given the current concerns of the financial crisis that we are looking at right now?
Sakshi, you see, the economy is in a good shape. Okay, but that's the reason Fed could able to take these steps to control the inflation. And as the Fed, if there is a soft landing or a crash landing or there is no landing, okay, these are the three scenarios we need to see. As Fed is assuming that there will be a soft landing, that means Fed is pretty much confident the inflation, the unintended consequences might be very less. If there is any kind of unintended consequences, okay, they can again come out with measures like QE in the coming days. So we need to wait and watch overall, but they are gunning to control the inflation right now.
Okay, okay. But to your mind, what exactly are the financial markets really pricing in? Are they pricing in a peak interest rate cycle very soon? Have they already started to price in the slowdown or the slowdown in the economy, slow recession that is in the second half of this year? What exactly do you think are markets across the globe and in India really pricing in right now?
So actually, if we see the how to think about discuss about peak inflation cycle is concerned, that we have been discussing from last one quarter itself. But still, the Federal Reserve is thinking that inflation is sticky right now because which they have been talking about transitory earlier. Now
Yeah.
they got into stickiness of the inflation. So we need to keenly observe how the things are going to evolve over a period of time and see if the banking crisis that erupted in US and Europe last fortnight, whether they are going to continue, there will be any further domino or ripple effect on the other banking sector, other banks in US and Europe. We need to wait and watch. This is the time we need to be extremely cautious how the things are going to be evolved in next 1 month and so.
Okay, understood that. You know, in that kind of a scenario, now you also say that it is going to be important for us to really understand how the RBI will be looking at the commentary made by the US Fed and the decisions on the rate hike and the comments also on that the fight against inflation might continue going forward as well. So we could anticipate more hikes going further as well, despite the kind of concerns emerging in the banking system. So looking at that, what kind of a direction does the RBI really take going forward? That's going to be important to watch out for. But in the interim, what should be the strategy that investors must follow in the Indian markets per se?
Coming to the Indian market, we are in a much better shape when compared to any of the emerging peers, and also when we compare with the advanced markets are concerned. So, what is the strategy a retail investor or a investor have to do in Indian market? One thing is stay invested. There is nothing to worry. Some people are trying to exit the market, thinking that these crises can be compared with 2008 kind of crisis. No, I don't think so, because FEDs and policymakers in the US, they're much aware about the situation, and still the 2008 crisis are there in their memory. It cannot be worse situation like before pandemic. They handled very well. So any kind of crisis that comes because of these rapid interest rate hikes that Federal Reserve have taken, if there are any kind of unintended consequences, Fed is again coming to action to rescue the markets. That's for sure. Always Fed have these kind of histories in the past. So we need to wait and watch how the movements of Fed in the coming days and how this entire crisis that erupted in the in US are going to have influenced the market and other pockets of the economy. We need to wait and watch.
Absolutely. So, in that kind of scenario, which pockets are you really bullish on in the current market realm? We have seen the markets correcting so far. I mean, like, you know, year to date basis, I think about 5 to 6% cut is what we've already seen on the benchmark indices. Looking at this kind of a dip, in case investors having some fresh cash to deploy at this point in time, which are the sectors and the kind of stocks that they should go for?
Sakshi, well, coming back to India, Indian banking story looks very interesting. We have the large cap private sector bank, even banks like State Bank of India, they're in a better position. So, banking and financial sector remains an interesting theme for investment in India. And also, our infrastructure story, capital goods story, defense story, these are the themes. They are very much intact in India. So, any softness in the prices in the coming weeks, that's the best entry point for the investor to cherry pick these stocks, especially in the large cap universe is concerned.
Okay, understood that. Let's look at some of the stocks that are buzzing in trade today. I wanted to talk about Maruti Suzuki. Reports suggest that Maruti Suzuki will be increasing prices across its models from April onwards. And of course, looking at the new norms that will also be launched, there could be a similar price hike that we can expect across the auto industry as well. How should one therefore look at the entire auto basket and stocks like Maruti now?
Sakshi, Maruti is in a better shape, okay, even despite of the correction that what we witnessed in the market, Nifty correcting from 18,000 to 17,000 in recent few weeks. Maruti is in a better shape right now for a longer term investors and who believes in India's growth story. Maruti is one of the proxy for the investors because Maruti understands Indian roads better, Indian drivers and Indian consumers better. In terms of the market psyche is concerned. So in autos, M&M and Maruti remains to be our favorites, and also Tata Motors also can be bought at dips. So Maruti have to do their EV story because there is a significant not there are no launches with respect to their EV story is concerned. Still they are mulling, still they are in a discussion stage how to launch their EV story in going ahead in India. So that is extremely crucial for Maruti. So investors with a long-term investment horizon, definitely India's auto story, despite of high interest rate regime, it's a good story in India.
Right. The IT stocks have been tumbling the most in trade today, and they have been trading volatiles with slight weakness from the starting of this entire banking and financial crisis that we've been witnessing. And there are fears because IT's revenues, 40% of them, they are contributed from the BFSI space, and most of these companies are outsourcing their business to US and to Europe. This segment especially could be vulnerable to cuts in revenues, and margins could be impacted. How are you looking at the IT sector now?
Sakshi, IT also one of the interesting story, but the kind of news that's coming from US, and it is completely early to say that there will be going to be a significant impact of earnings of the IT companies. It is too early to say. We need to wait and watch. But for the large cap stocks in IT are concerned, investors need to keenly watch, and for a longer term horizon, on a staggered manner, one can invest in these stocks. There is no hurry to jump and buy right now. Just observe the story, observe the news that are coming from US markets, and one can start buying IT individual stocks in a staggered manner. But it is too early to say there is going to be a significant impact on
Sure.
the earnings of the IT companies because of the current crisis that's happening in US.
Okay, understood that. Well, thank you so much, Mr. Bathini, for being with us on the show and discussing with us all these insights on the markets, the way the Fed has really gone ahead and taken that rate hike decision yet again, despite the turmoil in the banking space. And what does it really mean for the Indian markets? How does one really strategize their own investments at this point in time? Thanks a lot for sharing all these insights. The markets are trending higher, about 150 points up on the Sensex right now, 58,366. With the Nifty also inching higher by about 40 odd points right now, with 17,193 kind of levels being seen on this index as well. We'll continue to see how the markets trade in the last 2.5 hours. Do we build onto these gains further from here on as well, now that the big event is behind us, and which sectors really aid the recovery in the markets? We'll keep an eye out on that, and for that, you should stick with us on Business Today TV. Don't forget to subscribe to this channel, and also continue to engage with us on our other social media platforms, that's Facebook, Twitter, LinkedIn, and Instagram. Until then, many thanks for tuning in.